Alright guys, so things are getting out of hand. Now we know Trump doesn't like BRICS, and especially countries that trade outside the US. And to push his agenda, he's back using the art of the deal approach once again. But here's the problem. This might work on G7 allies who have no other alternatives. Their trade and even defense network is all tied up with Washington. So comply they must. And that's why we have Japan and Europe basically bowing down to Trump's demands. Now, South Korea is the latest country to get shaken down, and boy, is the price of freedom steep. Now, according to the king of the world, South Korea will be paying through the nose. They will give the US $350 billion for investments owned and controlled by the US. So, is that a direct investment or gift? In addition, Korea will buy $100 billion of US LNG, expensive energy shipped from halfway across the world. And this defies logistics when you have cheap Russian LNG next door. For all of this, South Korea will enjoy a tariff rate of 15% and they will not charge the US any tariff. Now, how one sided can this get? And here's what happens when your dependence on US markets gets weaponized. Now, sounds horrible for South Korea. Yes, it is. But it was always going to happen considering their tensions with the North and the heavy reliance on US troops. But don't get it twisted, this will hurt the US economy just as much. Now, just like Canada, Japan, and Europe, the Koreans they sent a lot of critical goods to the US market, and now prices are all going to head up, smashing down consumers once again. And here's the breakdown of Korean goods to the US: automotives at 31%, electronics and semiconductors at 18%, machinery at 21%, and the remaining 20% are more or less raw materials US industries need as well. So the cost of living in the US and production costs are going to fly to the moon. Trump's tariffs once again is just a big bailout from the American people, the private sector, all the way to the federal government. And how is this going to convince foreign companies to truly move their factories over? US consumers are facing the heat, and forget about exporting stuff from a US plant to foreign markets. There will be no margins, maybe even negative margins. And you would think that the madness is ending, but Trump, he just ramped things up. He's going after a founding member of BRICS and is about to punish them. Trump is now threatening a 25% tariff on India, which is very punitive. By now, it might even be in effect. It's enough to wipe away any margins and really wreck exporters in a worst case scenario. And yes, he's also tying India's purchases of Russian oil into the mess as well. So the 25% is the baseline, and the situation could spiral out of control with secondary tariffs on Russian trading partners. In all likelihood, this is another shakedown. Since the G7 has folded, there's nothing left to squeeze. Trump is now looking eastwards. He wants the shakedown BRICS, and he's starting with India. We can already visualize the plan. He wants the Indias most probably to buy Boeing planes and probably cut trade with China and buy US energy. He can't wait to replace Russian oil with expensive US crude. The damage to India will be immediate, and the US will be piling on even more stress to their own economy. India's biggest exports to the US are not critical goods, which makes things a little dicey for them. 28% of gemstone exports, 45% of diamonds, and 35% of Indian rocks heads to the US. Because all these are discretionary products, you can live without them, consumers can technically go without them. So a 25% tariff could be enough to drop demand in a very significant way. India's diamond industry will take a hit. But if we look at India's biggest exports to the US, such as pharmaceuticals, smartphones, and electronics and apparel, the amount is huge. Around $26 billion of direct consumer products will get hammered. Now, Trump is basically using the US consumer as a bargaining chip on the poker table. He's hoping for India to flinch and take a step back. Look, he just wants to sell more Boeing planes at this point. And the real threat, the actual problem, is the punishments for buying Russian oil. India is being used as a test case. They've been buying almost 2 million barrels a day from suppliers in Russia. And India's exposure to Russian oil is real. Over 50% of Russian shipments are headed to Indian refiners. And they're probably enjoying anywhere from 10, 20, some even say 30% discount off the benchmark. And you can't blame them. Thanks to the tariff war, everyone needs to keep their energy costs low. Just like how China exports goods deflation, Russia is exporting energy deflation. This is why Trump is starting with India. He desperately wants to choke off Russian crude revenues. And if India falls, if they step back, then so will the rest of BRICS and other buyers. At least that's what he thinks. Now, will India fold their cards? To be honest, I've no idea. Modi can't really let go with relations with the US, and they're still hoping for some sort of economic integration. But if they stop buying Russian oil, this will only benefit one country. They will be giving up precious volume to the Chinese. India folding will make China even stronger, and I don't think Trump even factored that into his equation. Now, China already imports over 2 million barrels a day of oil from Russia, and if India loses their volume, China will simply gobble it up. Suddenly, you have a surplus of oil. Chinese refiners will start transshipping oil products to the world. Their plastics will become much cheaper, plus the cost of production in China will come down across the board and squeeze global competitors, especially the US. It's impossible to squeeze out Russian crude without heavy repercussions. Biden and friends, they tried it in 2022 all the way until 2024. The EU is still trying, but they have all failed. Trump also won't succeed. It's just a massive waste of time. And even within China itself, a lot of Western businesses are feeling the heat. And this is within the Chinese ecosystem itself. They're really enjoying the supply chains, but competition is just too fierce. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Now, for the first time in history, Apple is shutting down one of their retail store in the Chinese mainland. Now, this is highly unusual because Apple, as we all know, is all about expansion. China itself accounts for 10% of their global store footprint. So something is going on within China that's decimating Western brands. Sure, Apple imports some components to make their phones, but those sold in China are mainly made within the mainland itself. And it all has to do with customer perception of Western brands. When you have the US constantly hammering your tech industry, it fires up a spirit of nationalism. Local Chinese people realize, hey, we have to support our local brands to help them survive. After all, many Chinese brands are banned or heavily tariffed within the US. Now in Q2, we are seeing something really amazing. Huawei has retaken top spot in the Chinese smartphone market. They sold over 12 million sets, hitting nearly 20% market share, and this is a double-digit growth of 15%. Now, many other Chinese brands like Vivo and Oppo also grew, but look at Apple, it has languished at just 15% market share. Once upon a time in 2023, once upon a time in China, they cornered almost a quarter of the Chinese market. But things have flipped. Chinese technology has more than caught up. Huawei can develop, they can supply their own chips, making their handsets world class. The other brands like Vivo and Xiaomi can sell decent phones at a fifth of the price of an iPhone. So you see the problem Apple has. They're charging too much, delivering too little, and they're priced out of the rising middle class market. Now throw in the anger and the outrage over US tariffs, you get an idea of why Chinese consumers are shunning Western brands. You pay more, you get less, and you're helping your adversary's economy. You just need two brain cells to process this. And if it continues, US firms will be missing out on a ton of revenue from a gigantic economy that's still growing. And despite the trade war, it's still expanding further. The IMF's latest report is out and they lifted their forecast on China. The previous estimate was 4% growth and now they're projecting 4.8%. And that's a very big increase out of nowhere. Shouldn't be a shocker, the world can't give up on Chinese goods and the central government is just pumping a ton of money into the system. And if Trump keeps this trade war up, the big losers will be US companies themselves. But let's cover our final story, and yes, we have to do an update on gold. I think everyone knows gold right now is stuck in a holding pattern. We are bouncing between 3,200 and 3,400. Prices hit a peak in April at around $3,500, but we are still awaiting a big catalyst to send it even higher. And here are the facts that we already know. BRICS is still buying gold, G7 countries are demanding their bullion back, and central banks are hoarding even more. And now we have a big asset manager telling us that the price of gold hitting $4,000 is highly possible. It could even happen by the end of next year, 2026. And they are giving us three reasons we have been repeating like a broken tape recorder. Trump will be forcing the Federal Reserve to become more dovish. In other words, interest rates will be coming down, and that could force a further drop in the dollar, and central banks will keep expanding their holdings. But get this next part, global funds are starting to get into the game. Some funds are doubling their traditional 5% to 10% allocation or more. Basically, more managed money is flowing into gold bullion. The big boys are moving in. Now, the gold market is just a fraction of the US Treasury market. Let's understand this. It's around $4 to $5 trillion if we combine physical gold together with all the ETFs. Now compare that to the US Treasury market, which is it's a monster $28 trillion system. So the gold market is 4 or 5 times smaller than US bonds, which means it doesn't take much money to move the gold market up. The trade war just adds fuel to the fire, and now that US trade is going to plummet, suddenly there isn't much need to hold dollars. And by extension, there isn't much point in recycling money back into US bonds. Now, since the tariffs started in April, the price of gold has been going up after an initial dip. We went from 3 grand to around 3,400. Now, the market knows what is going on here. The collective wisdom of investors knows this is inflationary, not just for the US. True, Besson will have to borrow a ton of money to subsidize his economy, but the rest of the world will also have to spend. Asia, the Middle East, Europe, and everyone is increasing their deficit spending to survive the tariffs. China, for example, is increasing their own spending by 40 to 50% this year. That's an enormous amount of money. And this is something that many people tend to forget. When any government spends money, there will always be some sort of wastage. A certain segment of people will get richer, and what do these people buy? They go out there to scoop up assets, and gold is directly on their radar. Now, you would think that this alone is a powerful tailwind, and it is, but realize the biggest holders of US bonds still aren't fully invested into gold yet. Now, economies like Japan and China still don't hold enough gold as part of their reserves. Japan has over $1 trillion in US bonds, while China still owns 700 billion. In comparison, they both hold only 6% of their total reserves in gold. And imagine how this will change in the next 12 to 24 months. Trump is going to keep hammering everyone. The G7 and the BRICS, they are both on the menu. No one will escape. Now, I sound like a broken tape recorder, but I want to clarify this. I'm bullish for asset prices long term. It's not because I believe the global economy is fundamentally sound. Far from it. It's because Trump has launched the world into a silent QE. I believe the entire system is totally broken, and in my humble opinion, assets such as gold is something that I won't stop buying anytime soon. But let me know what you think. Will BRICS bow down to Trump? And how high can gold hit in 2026 and 2027? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.